Good morning, everybody. So here we are, game plan time. My name is Gareth 𝗖𝗽, Chief Market Strategist and Master Trader here at VerifiedInvesting.com and InTheMoneyStocks.com. And we are going to get into it today. I got so much alpha for you guys today. So without further delay, let's just jump over to the charts. Let's talk about the Federal Reserve. So what you're seeing here, this is the 10-year yield chart. Now remember, we talked about, and this was the key, guys, right? We talked about how we could absolutely see that rates potentially were topping at 5%. We got the even number pierce, we have the trend lines up here, and so forth. Yesterday, the FOMC decision came out. Markets gyrated up, down. It was really during the speech. It was the 2:30 Jerome Powell speech where he started to hint that maybe the Fed was done raising interest rates. He basically was saying that this rise in interest rates on the 10-year yield had already done the work for the Federal Reserve, and therefore they might not have to raise rates additionally. So what did we see happen? We saw the 10-year yield starting to come back in, collapsing yesterday. This is the daily chart. Collapsing again today. I'm going to go over that. But again, this is a chart that I guided you guys to exactly what I said would happen, right? So again, if we just look at this, and I'm going to zoom in just a little bit so we can really divulge and talk about the technicals here. But what did we talk about in the last game plan? We talked about how we had this pattern, right? Down move with a flat kind of wedge pattern like that. That is a bearish flag. Notice how the highest point is the highest point declining to the lowest point, and then this is choppy inside bar action. Again, that tells us that likely you're going to see downside. What ended up happening? Probabilities played out, and we saw the down move, and we're seeing additional down move today. And I want to be clear, folks. There's no magic bullet. There's no crystal ball. All it is probabilities. That is all I am doing here. It doesn't take rocket science. It takes understanding the formation, simple formation, wedge pattern off of a down move, essentially a bearish pattern of consolidation. What is the probability telling us? It was telling us to favor a down move in yields. And what happens? The yields come to the downside. And again, I think that's so important because a lot of investors out there, they're like, wow, to become a pro trader, you just have to be so amazing and you have to be so knowledgeable and you have to have a huge IQ. No, to be honest, you don't need a big IQ. I don't have a big IQ, that's for sure. All I know is I've recognized, and I've done this for so many years, that I recognize the patterns and I just play the odds. That's really all it is. It's playing the odds, putting the odds in your favor, favoring that direction. We've talked about TLT down in this range. We're seeing TLT starting to spike up. Basically, that's an inverse yield play. So when yields go down, TLT goes up. Okay, so where was the target that I talked about with you guys on this chart of the 10-year yield? Well, simply put, I told you guys this already. I said this pivot low right here, essentially that is your target price. It's approximately 4.55%. All right, now could it hit 4.5%? Sure it could. But generally, this will be your first technical support. Now, I want to be clear. We may only see a small bounce off of that before further downside. But right now, that is the level to beat. That is the level that we should see some sort of test of technical support on the charts. All right. In tune with that, let's flip over to the US dollar and take a look at the dollar. If we look at the dollar, the first thing we have to recognize is that, again, a trend line gave us an accurate view of where the dollar may top out. And I've gone over this many, many times in this game plan. Yeah, I said you have to respect the trend line until proven otherwise. Well, again, we have this area over here, right? So again, right down here, we have this trend line right through here, right through these lows. And you can see again, right through that high, and we hit it again. So again, here, and this is really important, right? So it was, and again, it's hard for me to show this over here, but support, bounce, support, bounce, support, bounce, go up, 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 support, bounce, break, and then this becomes resistance. A trend line that is support, once it breaks, it becomes resistance. So now it goes up, hits, resistance, pulls back, goes up, hits. By the way, notice the topping tail. Maybe it's too small for you guys to see, but there's a weekly topping tail there. I pointed that out at the top. Remember, topping tails can fail, but you respect them until you get a close above. And that's, again, probability based. So here we have it, and now we're starting to pull back on the US dollar chart. So if we go to the daily, back to the daily chart here, and we flip back to that, what type of pattern is this, guys? What type of pattern is that? It's generally bearish, right? You have the bigger down move, and all of this is just basically sideways chop inside of that bigger down move, which, again, it doesn't tell us for certainty. It tells us with probability. And probability dictates at some point we should have a down move on the US dollar coming as well. We're already getting downside today off of some of this stuff. By the way, we did get some economic numbers this morning. I'm not going to really go into them because I have so many other charts to show you, but suffice it to say that if we go back to the 10-year yield, it was more positive data. This is the 10-minute chart on the 10-year. This is where the economic data came out right here, and yields continued to go down. So they were already trading lower going into that, but again, with the economic data today, we saw productivity numbers, we saw some other stuff. It was, again, net positive for the markets, net negative for interest rates, meaning it pushed interest rates lower. Okay, so that's where we stand on that front. Quickly, let's flip over to the S&P 500. So the S&P 500 this morning, if we flip to the intraday chart, notice here, this is the pre-market data. We are heading higher on the S&P 500, 426.70 right now. Now for me, what am I doing? I'm flipping to my daily chart and I'm going back to the levels that we've discussed prior. So we discussed this level. We got through there yesterday. Remember, this was target 1 and this was minor. The next level here, if we zoom in, and let me zoom in on this here. So the next level that I'm looking for, and this is going to be the big one. This is going to be the major test of this market, is this right up here, right in this range, right up here. So again, right now we're at 426 and change. You're looking at a level right here around 428, maybe as high as 430, somewhere in that 428 to 430 level, which is pretty remarkable because we could hit it today. We're only basically $1.50 on the SPY away from touching that level, which is just an intraday minor move from where we currently are. Now, what's fascinating about this, and check this out, guys, what's fascinating about this is that if we hit that level intraday, it's hitting resistance before Apple earnings after the close today, which will be epic for tech, and we have the non-farm payrolls report, the jobs report tomorrow. So wouldn't that be something if we hit it today and then somehow we see a sell-off, which again, the chart's hitting resistance might give us, that would take us to the downside. So just a couple things to keep in mind, guys. And again, I don't know how I'm going to trade it yet. I'm going to watch the levels today. I may start putting on some short trades if we get up into that range on a swing basis. Obviously, I will let you guys know tomorrow. Okay. So let's continue on here. So speaking of Apple, and I could look at the Qs, but the Qs basically, guys, here's the Qs. Before we get to Apple, let's just touch base on the QQQ. Qs are having a big up day this morning, trading at 357, right? So you can see it all the way up there. That's your pre-market data. And then if we go here, we can see, okay, so where is your first resistance? 359 is your first resistance. There's a gap fill that I talked about yesterday right there. That was kind of my first target. All right, so 359, we're very close to that already if it continues through that high end, but this is going to be a big resistance, 359, 360 on the QQQ. Okay, let's touch base on Apple. What do we have on Apple here? So Apple reports earnings after the bell today. Let's just take a look at the chart. Number one, we were in a very tight uptrend. Look at that uptrend. Once it broke, that was big, right? And you could see how amazing it was, how it seemed to hold inside of this channel for such a long time. Once it broke, though, boom, and then bounced. And then you start this new channel. Well, right now, we're trading here as of yesterday's close. We're up here pre-market. If we actually start getting towards this level, let's say 177 to 178, you actually get into your resistance levels right up here going into earnings. So again, I'm not going to short it going into earnings. That's not how I roll. I don't like taking the little higher risk factor of earnings. But I do think if we hit like 177, 178 today, there's resistance going into earnings. Be interesting to see if it pulls back on earnings today. All right, some stocks in the after hours here. All right, so let's quickly touch base on some of these. Yesterday after the bell, PayPal reported earnings. If we look at PayPal this morning, PayPal is being a rock star. And again, we could see this, like, check out that move pre-market. So yesterday it closed around 151 and change, trading at 155. That's a great move. Now, their earnings were good. They weren't amazing. But if you look at the daily chart, and this is something I've encouraged you guys to do, is you can look at the daily chart. And what's fascinating about PayPal is that if you go to your weekly chart here, you are trading or going into earnings, you are trading at levels not seen, check this out, guys, not seen since 2017. So again, when I look at a chart like this, and it's a good quality name like PayPal, I say to myself, okay, so you're telling me that the price of the stock is as if we were trading in 2017. It is 5 years later, and you're getting this company potentially for the levels that it was trading at when, 5 years ago. And is the company grown since then? And the honest answer is yeah. I mean, the company has grown since then, I would assume, and it has. So therefore, that makes sense. Now, you try to get the technicals to align. You do have some technical support right in here, and we get the bounce today. All right, so again, it's kind of thinking logically. It's all about the logic in the chart. But again, think about this. Imagine if I said to you, hey, guys, would you like to buy Tesla or Apple at the levels it was trading at 5 years ago? We'd probably all jump at that because Tesla was way, way lower even than it is currently, even with it falling off of its highs. So you have to kind of look at it and you say, okay, has PayPal's business somehow gone south? Have they all of a sudden become a crappy company? No, not really. I mean, maybe they're not the greatest, but they're not certainly a crappy company. And so you start to use logic to to decipher things in the charts. All right, so again, interesting chart on that one. We'll do one more here before we have a lot of earnings this morning. We have Crocs. This is Crocs first. Crocs dumping on earnings, got as low as about $70, back to $77, still down big on the day. Is there a level on the charts that gets me interested as a day trade today? I got some weird kind of stuff on this chart from a while ago here, but let's take a look. So we're at 77. What levels are down here? And the answer is no. I don't have any level at 77, but I do have a level right here. Look at this beautiful pivot point right down here. So that gives me a target of $67. If it flushes to 67, there might be a day trade available. That will be the first level of support. All right. Next one, let's talk about Shopify. Shopify is up on earnings, beautiful move, $50 to 57 or so. Is there a level to short this? Now, this was a beaten down name recently, right? So we've seen it come back down. $57, let me look at that. 55 is right here, so it's above that. So basically what that does is there's a couple things to look at here. The first thing I would do is say, okay, you have this pivot high at 67. That's a long way away. I doubt it gets there, but you do have a downsloping trend line right here, which is at $62. So 62, there may be a shortable day trade here. Remember, day trading is super high risk. And again, I'm just telling you what I may do as a day trader today. You guys obviously have to figure out for yourself if it fits your criteria and your investment strategy. Okay, last one here that I'm going to go over. By the way, Roku having a monster move as well. So again, I mean, there's just so many stocks moving this morning. Roku, look at this pop on Roku here. Let me refresh the chart. So Roku, if we go to the after hours on this, look at this pop on Roku. So this is an interesting chart, and I want to talk to you guys about this. So this is one where, number one, it's up huge on earnings, closing yesterday at like 59. So it's about almost a 20% move. But what I think is fascinating about this chart is that here was their last earnings report, where they reported earnings. The stock literally went from, $65 to $100 on their last earnings report. Then it faded, and then right here, they came out and they said, hey guys, we're going to actually beat our revenue numbers. The stock opened up here and then faded due to market conditions. It continued to drop back down. But literally, this company was telling us positive after positive after positive, and for some reason, because of market conditions, this stock just kept selling off. So again, if you start to pay attention to the underlying stuff, you can actually understand and make some intelligent decisions. Today, this stock is now trading all the way back up there. I don't really see a trade level here. This, again, could squeeze like this. I'm not going to get involved in trying to short that. Lastly, Moderna, guys. Moderna getting wrecked here. This is one company, excuse me, on Moderna where you have to respect the fact that it's a stock that has a different news driver. So normally I look at this chart and I say to you, okay, well, this is a beaten down chart, right? It's way down. Usually these going into earnings could get a bounce. It was at support. The problem is this is a different breed. This is a breed that was based off COVID, the COVID vaccine. Now, not to say that it's not interesting down in this range, and interestingly enough, you're starting to form an intraday pre-market bottoming tail. But again, you wouldn't use, when you have a story that's specific to like a COVID or to something else, you have to be a little bit more careful than just saying, hey, the stock has been beaten down, it's into technical support. You have to understand that there's different metrics going on here. So just a little tidbit on that. All right, back to the center screen, guys. We're going to take 15 seconds to thank iTrust. I will be right back. We're going to get into gold. We're going to get into crypto. We'll take a look at all that stuff. Here's the ad. Thank you so much.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, we are back. Let's get right into it. We got no time to waste. Over to this chart over here. I want to quickly take a look at what we have on Bitcoin. Bitcoin this morning, again, we saw it inching up. Interestingly enough, we've seen Bitcoin kind of chop around this 35,000 level. It did make a short-term high. It's starting to reverse right here. But again, couple things to note. This is all a waiting environment for the spot ETF. So just understand that, is that generally you're going to trend a little higher. People are optimistic. The question is, when do we get that spot ETF? That will be the driver behind the one push up. But as I said to you guys, I'm looking to short into that. All right, I already have a small short position right here, out of the money now by about $100 for 75 bucks, not a big move. But ultimately, if we get a pop, I have room to add to that short. I'm going on the premise, as much as I love Bitcoin long term, I'm going on the premise that this is a buy the rumor move, and it probably could get to 45,000 even. That wouldn't shock me. But I will add up there, and I think eventually you come back to 32 to 31,000. So I'm going to utilize that to my advantage. To looking at what's the driving force, take a look at this chart, guys. This is Solana. Solana has hit resistance. Yesterday, to me, this is a blow-off top. When you go on a candle that takes you all the way from basically $38 to $47, that's a huge epic move. And again, what's interesting here is that notice the reversal, that's a blow-off top. And blow-off tops essentially occur in markets or in assets when you have the last shorts getting squeezed out. They have to cover, when a short covers, they have to buy back the asset. So that's extra buying. And then what ends up happening is you get the last few kind of people on the sidelines, they jump through, they rally and buy in, and it's kind of the last gasp of the chart. Now, I have no idea where Solana is going to go, to be honest, in the next 6 or 8 or 12 months or 2 years or 5 years. But again, I'm going to respect the chart. And the chart right here has this beautiful resistance line. And if we flip back here, I can show you where it comes from. Okay, so if we go to this chart, simply put, I mean, look at this beautiful resistance level, right? So we have this pivot down here to here to here, goes right through there. We touch it right there, and look at that, right up to that upsloping channel trend line. Now, if Solana is going to pull back, where would I expect a pullback to come in, or where would it go? Couple levels, but the main one would be a retrace to essentially the scene of the crime. So again, if we take this away and we pop that on, there's your scene of the crime. Pivot high, pivot high, pivot high, right through that pivot high, and you're looking at basically $27. So essentially, if we pull back on Solana from this level, your target buy, and again, this is where I'll actually be looking to buy now, my target buy would be around $27 per coin. I was going to say per share, but it's not really a share. But that right there, that would be a beautiful trade setup, a retrace to the scene of the crime right there. And that's the way charts work. Charts ebb and flow. That's just the nature of what they do. All right. There's a bunch of other, by the way, there's a bunch of other assets in the crypto market making big moves. I can show you this chart real quick. This is NEAR. If we look at this chart real quick, Again, look at the run it's had. I mean, look at this. 1, 2, 3, 4, 5, 6, 7, so many green candles. It is starting to pull back, but look at where it's pulling back here, guys. If we take a trend line and we just attach the trend line to this high area right over here, and we drag it through, you essentially get that pivot top, right? So again, use your charts to your advantage. They do actually help guide you to not only where to exit longs, but where you can initiate shorts and obviously buy as well, right? I mean, it's all about where the asset is going per the chart, per probabilities. Excuse me, couple things. If we go to the charts here, let's just jump quickly. I have a couple more minutes. Here's your head and shoulders on oil. Just a reminder, it has triggered and it has not negated yet. So again, here's your trigger right down here. Let me jump to this side so you guys can see. But basically, we are still below and we've continued to kind of inch below. Head and shoulders about clear as day right here. And again, it triggered right there. That's your trigger. Now, if it closes back above the neckline, it's failed and it's off the table. It hasn't happened yet. I do want to show you one chart, though. There is a chart where it did fail. If we go to NVIDIA, let's take a look at NVIDIA here. In fact, you know what? Follow me over to the other monitor over here. I have it already set up for you guys on here. So this is a chart of the head and shoulders on NVIDIA. And I always want to show you when things fail because it's important for us as traders to understand that not every pattern is going to work out. Some will, some won't. In this case, this one is not. This is a classic head and shoulders. There was your trigger right here. It fell, and yesterday it closed back above. That is a negation of the pattern formation. This is no longer valid anymore. Now, it doesn't mean that it's going to go to new all-time highs. It just means you can't calculate an accurate target, which gave us that target down here. That's off the table now. Now you have to go back and look at the chart and reevaluate the chart. Okay, so that was an interesting one there. All right, we're going to go back over here. I'm making the camera crew work here a little bit. But let's just take a quick look at gold, guys. Gold continuing to consolidate here. Let's go to gold. Gold again consolidating beautifully. As we can see, I continue to think that this is bullish consolidation, especially if the dollar and yields are going to continue to fall. That's going to be very, very beneficial to the charts of gold and probably most commodities. Maybe not oil. Oil is more demand story versus inflation story, but nonetheless, gold specifically, I think this again has a lot of upside. Wow. All right. Let's jump back to center screen, guys. I am going to get going. I got a lot of things to look at here pre-market. Thank you, as always, for being here every morning at 9 in the morning for me to give you some levels, give you some alpha, give you my views on the market, and go over chart setups and teach to you guys. As always, thank you for the kind words. It really makes my day when I can read the amazing things you guys write, so thank you so much. And again, folks, this is the game plan at verifiedinvesting.com. I'll see you tomorrow bright and early, 9 a.m.